The last section of Chapter 2 involving gross income, all right, is the discussion of Social Security benefits. If you go back and you look at Form 1040, page 1, the gross amount, or when you look at the form, the net amount of the Social Security benefits will be reported on line 20A of Form 1040, and then again the taxable amount would be reported on line 20B. All right, if you get a client, all right, and they appear to be, elderly, make sure you ask them for Form 1099 SSA, short for Social Security Administration. Okay, on that form are going to be various amounts that you need to record on the tax return in addition to the Social Security benefits. For example, your client may have had federal income tax withheld from their Social Security benefits. Okay, Social Security could potentially be taxable for federal tax purposes. All right, it is not taxable in the state of Indiana, no matter what the amount is. Okay, it's also not taxable in the state of Michigan. So when you get that form, all right, there'll be like a pinkish orange box on there that says net benefits paid, and that's the amount that you would record on line 28. Okay, and then the tax software will do all the computations as far as how much of that is taxable. It could be as low as 0%, or it could be as high as 85%. Okay, 85%. All right, and that is what is shown for you in the book. All right. On page 225, there is an example of a taxpayer who received $7,000 in Social Security income during the year. If you look at line 18, it'll tell you that half of that, $3,500, was taxable. All right. In the second example, okay, on page 225, you had Linda who received $14,000 of Social Security benefits, and $11,900 of that is taxable. All right, and without even doing the math, I would suspect if you took 14,000 times 85%, you would get $11,900. Okay, so this can come as quite of a shock to a lot of different people that Social Security benefits can be taxable. So how do we know whether or not that they would end up being taxable? Okay, well, you need to look at the bottom of page 224. In the very first paragraph, it basically tells you, okay, what that amount is going to be, and then there's also some base amounts and who they apply to, and then a paragraph again at the bottom of page 224. Okay, in this example for Social Security, they use an item called MAGI, all right? Okay, modified adjusted gross income. So what exactly is modified adjusted gross income? Well, it tells you. It says it's the taxpayer's adjusted gross income, their AGI, without the Social Security benefits added in, plus any tax-free interest income. Okay, all right, the government says if you have a lot of tax-free interest income, you're probably fairly rich, and so we're going to tax your Social Security a little bit. Okay, all right, then once they compute the modified adjusted gross income plus 50% of the Social Security benefits, okay, which in our worksheet would be on line 1, okay, and on the Form 1099 SSA would be in the net benefits paid box, okay, then they compare it to the amounts in the table. All right, so if that amount is $32,000 or less, there is no taxability of the Social Security benefits. All right, okay, and if the taxpayers are married and they did not live apart for the entire year and still filed separate returns, okay, then all of it becomes taxable. All right. All the other taxpayers, including those that are head of household, single, and qualifying widower, okay, only the amount above $25,000 would be taxable. And again, the tax software will do all of this calculation for you. Okay, but the Social Security benefits worksheet on page 225, okay, all right, again, is what is being used inside of the tax software. Okay, now, warning, this will be on your test. All right, so you might want to make yourself aware of that worksheet on page 225. So basically, in summary, if you have a client who is drawing Social Security benefits and has other income, and that could be any income, that could be rental income, that could be wages, you know, it's not unusual for people to draw Social Security and still work, okay, you do see that once in a while. All right, if they have any other income, all right, that's going to affect their Social Security and potentially make it taxable at the end of the year. So, you know, do a little consultation with your clients, you know, talk to them about when they plan to retire, you know, tell them that, you know, their Social Security might be taxable. What I usually do is, if I have a client that tells me that they're planning on retiring next year, I'll ask them, you know, do you have any idea on what your benefits are? Okay, now, anybody, no matter what age they are, whether they're 20 years old or 65 years old, can go to ssa.gov, okay, all right, Social Security Administration.government, all right, and get a benefits earnings statement, okay, via a PDF file, all right. They used to mail them to you because of security. Now with the way the internet is, there's some shared secrets on there. For example, they would ask you questions about, you know, you used to live at this address, or you took a loan out from this bank and all that. And if you can answer all those questions properly, okay, you can get your Social Security benefits statement immediately. Okay, and you can save it as a PDF file if you want. Okay, they're only going to update it, of course, once a year, because your Social Security statement is updated, you know, when your W-2s are first sent to Social Security by your employer. All right, and that's how they get the information. Okay, so again, what I would do with a client is if they have that information, then what I would do is I would just plunk that amount, of course it's a monthly amount, so I'd have to take it times 12, but I would put that amount and I would add it to the current return that I'm working on, and then I would show them what the difference is in their refund or their amount due, to give them some kind of an idea what the taxability of the amount would be next year, assuming that all other things stay the same. So again, you know, watch out. Social Security is, you know, going to be taxable to a lot of people, and that's just something that you have to watch out for and advise your clients about.